everyone, and welcome to the special Real Wealth Report member strategy briefing and Q&A session. And with me, as always, the editor of Real Wealth Report, Larry Edelson. Hi, Larry.
Thanks, Mike. Thanks for hosting today. You know, I have to say right up front that this is probably one of the most special webinars that we're doing this year. It comes really on the heels, just 1 month about, after one of the craziest elections and presidential cycles in our country's history. And it's fulfilling what I've been saying all along, which is, you know, these super cycles are hitting. They're geopolitical and macroeconomic in nature.
Sure.
And they're, for lack of a stronger word, upsetting the apple cart all over the world.
Absolutely. We've seen just incredible volatility in the markets, not even just post-election, but even pre-election with the Brexit, and before that, the Grexit. It's
Brexit, the recent Italian vote, which
Right.
is not an Italian exit, but it's heading in that direction.
Sure it is.
And of course, you know, I was fortunate enough to predict that Trump would win. Not that I wanted him to win. I wanted to be, and I stayed impartial, but my artificial intelligence models and neural net forecast a Trump victory, and I announced it as early as the middle of September.
That's right.
So, you know, we're entering, everyone, that phase of the sovereign debt crisis that I started warning about last year, and it's going to increase dramatically in momentum and violence going all the way into late 2020. So fasten your seatbelts. That's all I can say.
We're in for a wild ride, indeed.
Yep.
And for today's strategy session, you wanted to focus strictly on the most pressing questions from our Real Wealth Report members.
That's correct.
So no slides or anything like that. We just want to dive right in and answer all of your most important questions.
Exactly.
There are a lot of questions in these volatile times. That's
Yes,
for sure.
and you know, we'll get to as many as we can. I'll answer as many as I can subsequently from the editor's mailbag. I cannot get to all of them. It's impossible, but you know, I will get through some of them over the next month that we don't get to today.
Yes, and we've got hundreds here in the queue already that I've got online, and thank you all for sending us your questions and your comments, and please keep them coming, as Larry said. So, Larry, the first question from Neil asks, what is your forecast for platinum and palladium, and will you be recommending adding those positions in Real Wealth Report?
Yes, absolutely. We got our toes wet in platinum and palladium earlier in the year. They went nowhere. We got our toes wet in gold, which I have to say, I have egg on my face. We had a bullseye forecast on October 5th where gold hit my 1242, 1245 support level right on the preordained day according to the neural net. And then, you know, a few days later, just collapsed right through it down to, we're trading, you know, under $1,200 today. There's still a chance that gold will get off the mat and rally going into next year, and we may have a bottom in place. It's a bit too early to say, but all the metals, Mike, platinum, palladium, even the base metals, copper, iron, gold, silver, they're kind of in a quagmire right now because Trump is attracting a lot of money into the U.S. dollar and into the U.S. stock market.
Right.
That's been going on for a while.
Just as you predicted all along.
Yeah, that's been going on for a while, and we now have the Dow, you know, well above 18,500. It's still going to pull back, folks. Please do not jump all the way in. Be very careful there. The 18,500 signal that I've been talking about all year long is really a confirmation that we're going to at least 32,000. I don't want to get, we'll get a question on that. But the metals, they're in a funk, okay? And you have to be patient.
Okay.
They will sort themselves out, and we will be there to ride them as they start that incredible bull market over the next 4 to 5 years.
Indeed. We'll wait for your signal on that. This question comes to us from Joan, turning from metals to energy. Do you still see crude oil below $30 a barrel, Joan asks, considering the huge rally and the OPEC agreement?
Yes, I do. The OPEC agreement is not going to stand. It's going to weaken over the next month or so. You're going to see competition, you're going to see fallout, you're going to see cheating. That's par for the course. It's always been that way with OPEC.
Yeah.
And we are really in the driver's seat now. We're in the catbird seat with natural gas and crude oil. And, you know, Trump is very pro-energy for the U.S.
That's right.
That's going to add to it. So I do not see the rally lasting. Outside chance of maybe $60 oil, but early, probably first quarter 2017, a big swoon down to below $30, probably below 26.
Wow, that'll be a big move.
Yeah.
This question comes to us from Roger. Roger asks, Larry, do you anticipate a reactive correction if the Fed does announce a December rate hike?
No, it's built into the pie. I mean, everybody knows it's coming. There's a 100% chance now, forecast by the futures Fed funds market, and the bond market has been crashing. Long-term rates have doubled in the past 6 weeks.
So the market, the bond market's already doing the Fed's dirty work for it. It's already raising
The bond
rates.
market is already raising rates dramatically. And what has the stock market done?
Gone straight up.
Exactly.
Interesting. This question is probably on all of your members' minds. This one comes from Neil. He says, when will gold bottom and begin to rise?
You know, picking a bottom in the precious metals market, gold or silver, platinum, palladium, is always harder than picking a top. The reason is there's a lot of fake outs. The market likes to fake everybody out at the bottom. Where at the top, you know, it just ends. The bull market just ends and it's over. You know, we should definitely have a bottom in place no later than the first quarter of 2017.
Okay.
There is a distinct chance at this point that gold will fall below $1,000, somewhere between 900 and 1,000 by the first quarter, January, February of 2017, and that will be it. That will be it. I am 99% confident of that.
Okay. This question comes to us from Ron. He says, Larry, I always look forward to your updates, but I'm wondering why you are not covering the U.S. bond market like you used to.
Well, I've been covering it in our trading services, and I've been talking about it in the Real Wealth Report. The bond market is the biggest disaster out there, and it will be for the next 4 to 5 years. And it's just getting started.
I see.
Now, rates will probably decline a little bit in the early part of next year, and then the bond market will collapse again.
Right, because markets don't go straight up or straight down.
They never go straight down or straight up. And, you know, it's going to be a 5-year bear market bust in the bond market. And the damage is going to be in the trillions of dollars.
So should investors that have maybe some bond positions, corporate or government, use this next rally if we get a bounce to unload those positions?
If you have that, yes, absolutely. I've been saying all along, stay out of all sovereign debt. European sovereign debt, U.S. sovereign debt. Some Asian sovereign debt is okay. AAA corporate U.S. debt is good. That's okay. That's actually going to do well.
Okay.
Just like the stock market. But U.S. government debt and state municipal debt, forget it. It's toast.
Interesting. Okay, this question, another question on gold comes to us from Bill. He says, Larry, you've said that gold will explode to $5,000 an ounce or higher. Are you still committed to that forecast by 2020? And could it be higher than that? And do you have any additional reasons for believing what will happen?
I'm 100% committed to it. I have absolutely no doubt about it. I can't tell you the exact day or week, but it will be sometime in the end of 2020, early 2021. It will be at least 5,000. There's an outside chance of 7,500.
Okay.
And silver will parallel that, so will platinum and palladium.
So all the metals will rise together into that cycle high.
Yep.
Interesting.
And copper. Copper will rise for 2 reasons. Trump's infrastructure plan and China's Silk Road infrastructure plan. We're
bigger.
talking $2 trillion between those 2 infrastructure plans and a lot of copper.
Indeed. This question comes from Albert. It's an interesting one. He says the Dow to gold ratio went from 13.6 to 16.3. Does it mean the Dow will outperform gold if the ratio continues to rise? And then he goes on to say ratio of 20 seems probable. See if you agree. Dow 20,000 at this ratio leaves gold at $1,000.
Yes, I just wrote about this. The Dow to gold ratio is a very important ratio in my mind because I still consider gold to be honest money.
Right.
So the relationship between the Dow and gold can be used to make macroeconomic forecasts. It was how I pegged the March 2009 low using the Dow gold ratio.
That's right.
In terms of the Dow gold ratio, the Dow had already lost 87% of its value in March of 2009.
Complete washout.
Nominally, it lost 50 or 60%, but
in terms of real money.
in terms of real money, it had lost what it lost during the Great Depression.
Right.
And that's when 1 week later, I said it's bottomed. The next move is to at least 14,000, then 16, then 18, and so on and so forth. The ratio is telling me we could easily, it's confirming, along with some other indicators I use, and the artificial intelligence models that I use, easily Dow 32,000, a distinct possibility of Dow 45,000. But it's going to be a narrow rally, as it's been all along. Okay, you're not going to see every stock double and triple from here. Okay, so you can't go all into the gold and ignore, all into the Dow and ignore gold. That would be foolish. Diversification is key.
So they'll rise together, in other words.
They will rise together just like they did between 1932 and 1937.
Interesting.
Yeah.
This question from Matt, he says, given your expectations of capital worldwide moving to the U.S., do you anticipate stocks trading at crazy multiples like we saw in 2000 during the tech peak?
It will happen to some, for sure. I mean, that's always the case.
Sure.
Right now, the Dow rally is extremely thin. The most recent 200 or 2,500 points worth of Dow gains came 60% from 5 stocks.
Yeah, financials mainly, right?
JP Morgan, Goldman Sachs, Caterpillar, and a couple others.
Yeah.
So you have 5 stocks that are pushing the Dow up, and that's why I say it's a very, very dangerous market right now. It will pull back, test my 18,500 support level, and then, or even a little bit lower than that, and then take off again, and that's when you want to be in.
Okay, we'll have to watch for that pullback.
Yep.
This question from Randall. Larry, have the lowest mortgage rates already passed, or will there be one more dip in which people can anticipate mortgage refinancing?
There'll probably be another dip, but the low in mortgage rates, yeah, it's gone.
Okay.
It's passed.
This question you kind of alluded to already, but Fred asks, when do you expect the stock market to start its meteoric rise to 32,000 or higher in earnest? Pull back first or no?
Pull back first. As I just said, it's being held up by 6 stocks.
Okay.
Or 5 stocks, 60% of the gains. The advancers compared to the decliners, it's barely 1 to 1. You cannot have a runaway market. You need 5, 6 stocks going up for every one going down to have a runaway market, and we don't have that yet.
Healthier
it may
market
look like it's running away, but it's not.
I got you. Walter asks, have the grain markets bottomed yet? What's your take on that?
They're starting to finally, later than I expected, show some signs of bottoming, yes. And I have to admit, we're starting to see some signs of inflation. Now, do not expect hyperinflation. But if you see 2%, 3% inflation in this country, that's very possible.
And that's a sea change from what we've seen the last 10 years or so.
It's a huge sea change. We'll still see deflation in Europe. There's no question about that. Europe is such a basket case.
Going back to the grain markets, which grain in particular do you have a favorite that you think may perform the best? Corn, wheat, soybeans?
Beans, wheat, corn. I pretty much rank them all the same.
Okay. This question comes from Cameron. Larry, when it's time to back up the truck on gold and silver, will you provide option trades for Real Wealth Report subscribers?
No, I will not. Options trading requires razor sharp timing, and I cannot provide that in a monthly edition, such as the Real Wealth Report. Real Wealth Report is for your core wealth protection and slow and steady growth. Sometimes rapid growth, but not very aggressive speculative types of trades.
The options simply move too fast for a monthly publication. to keep
Yeah,
up.
I mean, there are times when options move so fast I couldn't even pick up the phone and call you fast enough. I mean, it's just the way it is.
Yeah. This question comes from Barry. He says, hi Larry, with interest rates heading up and being at the end of the credit cycle, just how could gold rally in the time frame you state unless countries and associated currencies begin to fail in short order?
Well, let's get something clear. The best bull markets in gold and in precious metals have occurred with rising interest rates. And throughout history, the best bull markets in precious metals have occurred with a rising U.S. dollar.
Interesting.
This was notably, this is especially notable in 1932, when Europe, all of Europe went bankrupt. Money flooded the Dow Jones Industrials, sent it up 387%. U.S. was in a Great Depression, 25% unemployment, all that bad news you hear about and learned about in school.
But stocks still rose.
But stocks went up almost 400%. The gold in the black market, of course, it was controlled.
Right, it was pegged.
It was pegged, but in the black market, American gold eagles doubled in value in the black underground market. And people were hoarding gold so much that President Roosevelt decided to devalue the dollar, first by raising the price of gold that was equated to the dollar, and then confiscating it.
Yeah.
Now, I don't think that's going to happen today. I'm pretty sure there's no confiscation today. Governments all over the world basically want to get rid of gold. There are a few outliers, but gold is being treated as a dinosaur. The Western governments, developed economies of the world, Japan, all of Europe, the United States, they could care less about gold.
Yeah. You said before, and you've written about it extensively, that the major governments actually want to go to a cashless society. They're more likely to confiscate your dollar bills in your wallet.
Yeah. I mean, what would really truly be golden to them would be a digital cashless society.
Right, so they can track everything.
They can
tax
track
everything.
everything that you do that way.
Yeah.
Live, real time. So, you know, the gold is on its way out for the governments of the world.
Right.
But that does not mean it should be out of your portfolio.
Absolutely.
As a matter of fact, it's going to do the opposite, make it more important for you to own it.
Makes sense. This question from Rob, it's an interesting one. He says, hello Larry, how do you think the introduction of the Sharia gold standard this month will affect the gold market? We've had a number of questions.
Yes, this
like
is,
that.
you know, another fundamental development being popularized by a lot of analysts who really don't know the gold market. In Sharia law, you've always been able to own gold. Okay? Men have been outlawed from owning gold, and women have been legalized to own gold. That's part of the religion. What has not been able to be done is earn interest. So in Sharia law, they came up with a scheme a long time ago where you could buy and sell gold simultaneously and in the futures market, and that was an indirect way of earning interest in the Sharia financial system. Islamic societies and finance want to be part of the modern world.
Sure.
Despite extremist jihadism, all this stuff you hear, and they're not going to be part of the modern financial world if they just go off on their own and use a gold-backed currency. It's not going to happen. Okay? And those who say they're separating, they're going to have their own gold-backed monetary system, they have no clue. They're just scaring you.
Yeah.
They're just trying to scare you. They're not going to do that. I mean, it would be suicidal financially for Islamic societies to do that.
So this change at the end of December is going to have no meaningful impact, in your view, on gold?
No more impact than when the yuan was officially acknowledged as a reserve currency
Right.
September 30th of this year by the IMF.
Yeah.
No more bullish impact than the opening of, Shanghai futures trading and AM, PM fixes in Shanghai. Nothing.
It's funny you mentioned that.
There's one analyst out there that every time there's a news event, he says, "Oh, it's the end of the world. Gold is going to 5,000 tomorrow."
Indeed.
Clueless.
Yeah, it's funny you mentioned the Chinese reserve currency because earlier this year there was a big hullabaloo about the fact that the U.S. dollar would be doomed as soon as China entered the IMF drawing rights.
And exactly
the opposite happened.
And I predicted it. I said, no, watch the dollar go up.
Dollar went up, and the Chinese currency went down. Amazing. You got to really pick your shots at who you listen to in this market.
Well, you got to think it through logically, and most people don't.
Right.
Most, unfortunately, investors don't, and most analysts, MBAs, outside analysts, financial advisors, and almost everyone on Wall Street doesn't get it right. I worked on Wall Street for 20 years, and I can tell you how pathetically bad the knowledge is.
Indeed. This question comes from Jim, another one about the stock market. He notes that the Dow closed above your target, 18,500 at the end of November, a buy signal in your book. Is it possible that the setback now is something that could not happen? In other words,
it's always possible.
The cycles have changed. What are the odds that maybe we don't get that pullback?
Well, it's always possible. I can't deny it, it's definitely possible. But I will tell you this, any market that goes straight up is weaker than you can believe, okay? I have an analogy for it. It's called a trebuchet. Trebuchet is a French catapult, old world catapult. Slings a fireball, towards the castle, during a war. What happens? You have an arc. It crashes down. It can't stay up. It just can't stay up. So when you see a market that's going trebuchet, parabolic, straight up, it is going to crash and burn just like a fireball at the end of a trebuchet.
Yeah, that's exactly what we've seen since the election.
And
straight up market.
Yeah, but again, 60% of the gains are from 5 stocks.
Right.
So that's a fireball that's burning out. That's what that is. It needs to come back and stair step higher. Then you get in.
Then you get a real rally.
Yeah.
Okay, Emmerich asks, even if gold does drop to a new low, what is the probability that gold miners index like GDX will make a lower low than the low made in January 2016?
It's possible. Yeah, obviously it's possible. I do like the way that junior miners and senior miners have better relative strength right now than gold itself. So that is optimistic. But clearly if gold's going to drop below $1,000, it's going to drag all miners down.
Sure.
And that's okay. We have in Real Wealth Report, we have stops in place. We're not fully invested by any means, either in the physical metals or ETFs or senior miners. So, it'll hurt. Got to go through that. It's not always, it's not always fun. We've had a tough month. There's no question about it with gold. But I'd love to buy cheaper. Who wouldn't?
Yeah. When it's on sale, why not load up?
Exactly.
Interesting. Here's a question actually from another subscriber who notes that silver and silver miners appear somewhat stronger than gold and gold miners. Do you think there's more profit potential in silver?
Long term, there's actually more profit potential in silver, but it's going to be very volatile and it's going to rip your guts out. I say that with no trepidation. I know the silver market.
The devil's metal, you've called it, right?
I used to trade it on the floor of the exchange. I know all the games that go on and still go on in the silver market. It is a manipulated market. You cannot change the trend. But there are games that are played in the silver market. Back in the 80s, for example, and I've heard it's starting to happen again, the professional traders would actually take silver out of the COMEX inventories, the warehouses, put it on a 747, fly it around the country or to Europe, make it look like inventories were falling, get a rally going, and then they'd fly the silver back and dump it on the market.
Those games still go on today?
Those games still go on today, believe it or not. And there's some very famous names that are involved in it. Names that you would be very surprised about. I'm not going to release them here.
Yeah.
But I've seen it, and I know who has been behind it.
So although silver may outperform gold in the long run, gold's probably more the stable investment to make.
Gold is far more stable. It's going to be far more stable. Silver's going to just like worse than a roller coaster coming off the tracks.
Okay, here's a question from John. He says, it seems gold's bottoming process gets pushed out farther and farther into the future. I'm starting to wonder if a new gold bull market will ever occur. Any hope for 2017?
It's been frustrating. I can tell you this, you know, I nailed the low in 1999, the high in 1980. Nailed the top in September 2011, basically 1 week after Bernanke announced QE forever, and everybody thought gold was going to 5,000 that day.
Right.
And I said, no, you know, it's not reacting. It's time to get out. What we have seen, and I've done these studies, and I've also learned from Martin Armstrong, many of which you know of, that markets move in certain ways. And bear markets occur in units, time units of 3 and 5. That could be 3 weeks, 3 days, 3 months, 5 days, 5 weeks, 5 years. And what we're looking at right now basically is a 5-year bear market from the 2011 high. That brought us to the low in 2016.
Right.
And we had a closing high in 2012, which was higher than 2011 on a closing basis.
That's right.
And that would bring us to a 5-year bear market completion in 2017, early 2017.
So a final fifth wave down, and that's it.
It's kind of like a fifth wave, if you want to call it Elliott. It's not Elliott wave, but it's a timing tool.
Right.
And my artificial intelligence models, my neural net, confirms early 2017 as part of that wave down where the bear market should definitely come to an end.
Right. And so that's a really critical point, I think, for all your Real Wealth subscribers. It doesn't matter whether gold bottoms around, you know, these levels, 1,200 and change, 1,100 or 1,000. It's going to, the fifth wave is going to complete, and it's going to bottom sometime in the next few months.
That's right.
No matter the level.
And timing is everything. And that's a tip I want you to all take away. The tip being, and you intuitively, I think all of you know this, bull markets last longer than bear markets.
Right.
Bear markets are short compared to bull markets. And bull markets, you know, typically last 7, 11, or 21 years, whereas bear markets last 3 or 5 years. And on a yearly level, it could be a 3-week bear market, and then followed by a 7 or 11-week bull market.
Right.
So it's a way of dividing up and looking at the market and saying, hey, where are we? You count your bars on your chart and you say, okay, we've got 10 bars up, 10 months up, 10 weeks up, 10 days up. Might be getting a little toppy here because the next interval is 11. If you go from 11 to 12, then you probably are going from 12 days up to 21 days up, or 12 weeks up to 21 weeks up, or 12 months up to 21 months up, or 12 years to 21 years.
Sure.
Is it fail-safe? No. But it's like a rough GPS to each and every market. They all display the same characteristics.
Fascinating stuff, whether it's stocks, bonds, or gold. They all follow the same pattern.
Yeah, Martin Armstrong taught me that. I refined it a bit. I have my own tools that I program to turn it into something more meaningful for myself and my subscribers and members. And my artificial intelligence models, the neural net incorporates a good degree of that.
Interesting. This question comes from Ken. He says, with interest rates rising, Larry, and the dollar surging higher, why would we expect a rise in gold at all? And how will Trump's policies affect the above?
Well, again, rising interest rates, look at it this way. Rising interest rates means the patient has a heartbeat, okay? And if the patient has a heartbeat, that means there's economic activity.
Right.
That means the velocity of money and credit is starting to turn over again. There's a heartbeat. And that is good for gold, period.
Yeah, because inflation eventually starts creeping in again.
Yeah, exactly. And you don't need inflation necessarily to get a bull market going in gold. Mm-hmm. You can have extreme hoarding, mm-hmm. which we will see down the road in about a year, mm-hmm. when it really becomes obvious to everyone that the United States, Europe, Japan are all going down the tubes, and they all want a piece of you through digital money.
Right. But the fact that interest rates and the dollar are rising here in the U.S. means the patient's getting a little stronger, which ultimately is good for stocks and gold.
Of course.
Yeah. Here's a question from Bob. Since naming B2 Gold your #1 gold stock, you haven't mentioned it again. Is it still #1?
It's still #1. There are many others that are going to be ranked right up there once we get going in the junior miners. But we're in a holding pattern. I think that's the best way to describe it, with miners, senior and junior, mm-hmm. and with gold, silver, platinum, palladium. The dust is still circulating. It's almost as if those markets can't believe Trump won. I mean,
it shocked a lot of markets.
It shocked a lot of markets, and it paralyzed those markets. Mm-hmm. So we just have to be a little patient.
Okay, makes sense. This question from Joe, he says, I would like to hear your comments regarding gold manipulation by central banks. You touched on this a little bit in the silver market. How is the Shanghai Gold Exchange going to affect the price of gold also?
Well, let me just say this clearly. There is no central bank manipulation of gold. No one single central bank or group of central banks can alter the cycles or alter the trends of any market, mm-hmm. for more than a few minutes, okay? They can't change a bull market into a bear market or vice versa. It's impossible. Mm-hmm. It is totally impossible. Even in markets like the Shanghai market or the Hong Kong market or the South Korean markets that have, giant conglomerates that run the show. Mm-hmm. I mean, it's impossible. It is utterly impossible. Now, when a lot of people, uninformed analysts, talk about manipulation in the gold market, in the Shanghai market, previously it's been proven there was some manipulation in the London AM/PM fix, right. both in gold and silver. Mm-hmm. What they're talking about is scalping 10 cents off an order.
Right, not changing the trend.
In split seconds.
Yeah.
Okay? That's what they're talking about. And it gets misinterpreted, and it gets converted to, oh my God, the market's manipulated. This has gone on since futures markets started trading in Athens, Greece, 5,000 years ago. Okay? It goes on in every industry in the sun.
Right.
Someone tries to skim a few pennies off an invoice or, right. Out of someone's pocket. It's just the way it is, mm-hmm. okay? But it doesn't change the trend.
Right. It's important to point that out.
Right.
Here's a question from Russ. He says, Larry, thank you for all that you do. I remember you having a place in Bangkok, and I believe also stateside. Do you think it's wise to have a second passport and or citizenship outside the U.S., or just having a second home is good enough? And if so, what would be the benefits or consequences? Interesting question.
Yeah, it's a very good question. Yes, we still have a home in Bangkok, Thailand. And as a matter of fact, we're going there for Christmas and New Year's, and I'll be reporting and working from there. I think it's a good idea if you can afford it, if it's something you want to do at this stage in your life. You have to look at everything, your commitments, your children, your grandchildren, sure. your career. It is not a decision to be made lightly. I will also tell you this, there really is very little privacy left. There are techniques, and I have some reports that can afford you the best wealth protection and privacy known to legal means. But it's almost impossible to get completely off the grid without doing something illegal. And I do not recommend that.
Okay. This question comes to us from Kay. She says the small cap stocks have had a huge upside over the last few weeks. Do you see this continuing as we go into 2017 and beyond?
No. I see them trying to play catch up right now to the big blue chips.
That's right, because they underperformed earlier in the year.
And they had underperformed for so long. So to me, they're in a bear market bounce. And as a matter of fact, I don't have the latest statistics, but until recently, more than half the entire publicly traded stocks in the United States were in bear market territory. Again, it's that cream of the crop that's just rising.
The
Most
JP Morgans
are either going sideways or down.
Right. Okay. This question from James. You mentioned in past Real Wealth reports that gold would rise with the dollar at some point in the future. Do you still see this happening? And at what point going forward?
Yes, I do. It's a little bit delayed. It's not happening as soon as I expected. I expect it to really get into gear mid to late 2017. The dollar is in an extremely strong bull market.
Yes.
We're going to pull back here now for 1 to 3 months. Okay, again, there's that 1 to 3 bear market reaction.
Right.
And then another wave of money is going to come into the dollar, mostly from Europe. And if Trump does something, which I would believe he will, in repatriating offshore U.S. cash, that's a tsunami of dollars that will boost that dollar straight up.
Sure, that'll be great for the dollar and for stocks.
That's right. And then there'll be the growing recognition that Europe is truly going down the tubes. And you'll start to see money hoarded in gold, and that will drive gold up along with the dollar.
Okay, interesting. Here's a question from Grant. It's kind of a 3-part question. Thank you very much for your excellent guidance on the downtrend in gold over the past few years. Number 1, is a cycle inversion confirmed yet? If not, what is also required to confirm that? And if so, what are your critical support and resistance levels, daily, weekly, on the way down to 1,000? Kind of a complicated question, but talk a little bit about the potential for a
very, very
cycle
good
inversion.
question. No, a cycle inversion is not confirmed yet. What we do have is a confirmed cycle extension. May sound like I'm, playing with words, but the artificial intelligence model has not inverted. It's showing an extended decline once we broke that 1242 level on October 5th.
Extending out in time and perhaps a bit lower in price?
Yeah, extending out in time and lower in price and into January. That is actually far better than if we had a cycle inversion. I'd rather see it maybe a little bit more, drawn out than an inversion. An inversion could imply $600 gold, and I don't want to see that.
No,
okay?
Exactly.
And I don't think we'll see it. The key levels going down, this weekend I'll be writing the December Real Wealth Report. It's my 2017 forecast issue. It's a gala issue for all the most important markets. I will have charts of my artificial intelligence forecasts, and I will have the support and resistance levels for the major markets, not on a daily basis, but let's say monthly support and resistance for 2017. So that will give you a guide to the stopping points on the way down.
Indeed. We'll look forward to reading that Real Wealth Report then.
Yep.
This question from Shannon. I have some money in a Weiss A-rated bank, according to the Weiss stock ratings. However, do you think it's a good idea or not to have money in any bank? Also, what about credit unions and brokerages? If they fail, what happens to customer accounts?
I think you're fine right now. In U.S. banks, they're a lot healthier than any other banks in the world. Credit unions are good. Brokerage accounts are good. The big brokerage accounts, I wouldn't go with some small, brokerage account, Interactive Brokers, Charles Schwab, TD Waterhouse, the big names. You're fine up until probably the beginning of 2018. Then it's all going to hit the fan, not just for Europe and Japan, but also the United States. So we have 2 solid years, almost 3 solid years, where we're going to be okay if you make the right moves and if you understand what's going on.
And then after that, what do you think about the safety of the banks? Is it possible?
We're going to see bank failures come late 2018 going into 2020-21, not based on real estate and a mortgage crisis. We're going to see a tsunami of cash leave the U.S., head to Asia, and probably back to Europe, because by 2018, I believe the euro will be gone. And the European Union will break up, and they will go back to their original currencies.
Interesting.
And that will suck the money back out of the United States.
Into the individual countries again. Interesting. And we're already seeing that play out with Britain.
Exactly.
Yeah.
Well, Britain was never part of the euro, but they pulled out of the European Union.
Part of the European Union, yeah.
Okay. Italy will definitely be next. They will pull out, and they will pull out of the euro. Greece keeps getting these small bailouts, but it's only a matter of time there. France is the next big worry. Frexit. Marie Le Pen and the Nationalist Front, basically the Socialist Party, is going to take over, okay, and they are going to want to be out of the European Union. Holland is not running again. What's coming from Europe is far worse than what you've already seen.
I see. Okay.
Yeah.
Here's a question from Harold. Larry, is it possible that we will see $500 gold instead of $5,000 gold?
Look, I'm not going to say no.
Anything's possible.
Anything is possible. I highly doubt it. I highly doubt it. To get $500 gold, you would need the entire world to go into a complete deflationary depression. And with the monetary system that we have today, although it has inherent limitations and there are problems with it, especially in relationship to emerging Asia and emerging economies, it is not a golden set of handcuffs, which is what the gold standard is. Under a gold standard, everything would collapse. We can't go back to a gold standard. It's impossible. Okay? It didn't work twice before it collapsed. Why would it work now with 7.4 billion people on the planet and highly more sophisticated economies? You need a monetary system that is flexible and fair to all. So, you know, it's not going there.
Yeah, that's a great point. In case of a sovereign debt crisis, William asks, is a Treasury money market fund a safe place for your cash?
Yeah, 1 year duration or less, U.S. government is fine. You're not going to earn much. It's up a little bit, or, you know, yields are up a little bit, but, you know, you're not going to ever get back to 8%, 6% money market funds.
At least it'll be safe.
At least you'll be safe and liquid. The U.S. government will not default on a 1 year maturity.
Okay. This question and a comment comes from Ken. First, his comment, he says, Larry, love your work, and we really appreciate all that you do for us. Can you provide 3-month future windows when you expect gold to hit $2,000, $2,500, and $3,000 an ounce?
When I have a high degree confidence forecast from my artificial intelligence neural net charts, I will do so.
Okay.
And I have.
Got to get the bottom in first.
But I also don't like having egg on my face. Okay, now I had a perfect bullseye call, as you all know, October 5th, 12:45, in gold. I mean, it was a thing of beauty. And then, you know, slapped me in the face, slapped all of us in the face. So, you know, I was very proud of the call, and then I, you know, got slapped in the face, and everybody was writing me, "You're my hero." But, you know, the market will humble all of us, and if you get too cocky, it'll slap you down. And that's what happened to me. And I don't really like going there.
Okay, makes sense. This question from Angelo, he says, first of all, thanks very much for helping us in this difficult time. Also, you recommended buying Freeport McMoran at $7 a share, looking for a target price of $30 to $50 longer term. Then you gave us an indication to take profits around $10. Now it's around $15. Of course, I follow your recommendations because I trust you. Are you awaiting a pullback in Freeport to buy it again?
Actually, I think we took profits around $13 or $14, if my memory serves me correct. Yes, I'm waiting for a pullback.
Okay.
It's a great senior miner, and I'm waiting for a pullback, and I don't like the way copper and gold, which are its main assets, are acting.
Okay. Tony has a question shifting back to energy markets and oil. So OPEC has an agreement. Oil popped above $51, which is resistance. Some say, though, if oil closes above 52 solidly, we're going to $60 a barrel. So the question is, are we in for a triple top in oil or a breakout to new highs? Your view?
$60 is a possibility. I can't deny that. Even 62. I don't think we'll get there. Okay. The bigger course of action is going to be back down. You know, if we get to 60, 62, I'm going to short the heck out of it. I can tell you that.
Yeah.
I'm tempted to here because it's not acting well. And I know OPEC's going to cheat.
They always do, right?
Russia is already starting to cheat.
Yeah.
And again, we're in the catbird seat.
So lower prices longer term.
We
regardless.
haven't exerted that influence yet, but we will.
Yeah. So lower prices longer term regardless of whether it goes a bit higher here.
Yeah. You're not going to see $140, $150 oil anytime soon.
Okay.
Okay. You will see it around 2020, 21, but it will be war-based. It'll be war-based.
Okay. This question from Maria, and we've had a couple like this. I just received the rights offering to buy shares in Brio Gold because I own Yamana Gold per your recommendation.
Right.
Please advise, these are the options provided by the rights offering. We can buy shares in Brio at $3.25 a share, sell shares, or do nothing and the shares expire. What's your advice on the rights offering for Brio?
Well, I would take the deal. I would take the shares. My understanding is if you're an existing Yamana shareholder, the shares will be given to you as a dividend in kind. So you don't have to shell out the $3.50. It's being given to you. So it's like a freebie. I mean, I would take it. And Yamana also just recently announced a dividend for early January of 2017. Institutional ownership of Yamana is up. The properties are looking good. Basically, they're looking to recover some value from Brio in Brazil and concentrate on their other 6 mines, which are far better producing mines than Brio in Brazil. So I'd take the deal. To me, it's a freebie.
Okay, good advice. This question from William, if we are underinvested in physical gold per your guidance, what should we be doing now to come up to your full recommended position for gold and platinum? William wants to know.
Nothing. If you are not invested in gold, let's say you have 0% in gold, stay at 0 until I tell you otherwise.
Okay, clear enough. Same for platinum?
Same for platinum, palladium.
Okay. This question from Jane, she asks,
Silver.
Jane asks, is the run-up in natural gas prices for real or just a correction in an overall downtrend?
I think it's anticipation of a bad winter.
Cold winter.
Yeah, it's a cold winter. It seems to be a localized, weather-related, anticipated bull market. I believe we'll see natural gas down to $2.20, $2.25, even $2 by the spring.
Okay. This question from Stephen. Dear Larry, many thanks for your incredible work. I would greatly value your take on soybeans, corn, and wheat coming forward into 2017. And you touched on those earlier.
Well, they seem to be bottoming. They've been giving me trouble with a bottom, just like gold has. We've seen several patterns that look like bottoms in the grain markets.
Right.
This one is probably the best looking of them all over the last 3 attempts at bottoming. And I'm very bullish longer term, but with the grains, they kind of like energy. They're fickle. They're subject to crop reports. They're subject to weather, El Nino, et cetera. And, you know, they can be hard to trade and invest in sometimes unless you really have a handle on the crops, the weather, and so on and so forth.
Yeah, so many things
long
affect
term,
them.
and they're volatile. They can be as volatile. Soybeans can be swing as wildly as silver.
Yeah.
So, you know, I like them, but I like them when I'm really confident in them. And I'd say I'm 50 to 70% confident that they're bottoming. That's not good enough for me.
Yeah, exactly.
It's just not good enough.
Okay, this question from Lynn. She says, recently I have been receiving commentary and predictions from another gold expert, and he suggests gold prices could sink below $700 due to the disruptions in the Indian currency meant to disrupt the black market economy by stopping underground purchases of gold in India and thereby decreasing gold demand. Any thoughts on that scenario?
Well, it hasn't happened. It's another one of those crazy ideas that somebody thought up, you know. What India has done, they want to eliminate cash, okay? So they're starting with some of the larger notes that they have. They want to eliminate gold, okay? I've told you, so does Washington, so does the ECB. So does all of Europe. But they didn't do it in the right way. So it's backfiring on them. And it's going to backfire on the Federal Reserve, the ECB too, because when they go pushing to eliminate cash notes, they're going to create an underground economy of barter and services and a new, what I'm calling, a new black market in gold.
Right. So
we don't have one now. Okay, it's highly regulated because they want to get rid of it.
Right.
But what you're going to see over the next couple of years is a lot of illegal, let's say, black market, underground trading of goods and services, goods being gold, artwork, diamonds, and other things, jewelry.
So India will get just the opposite of what they're trying to do.
Yeah, this is government. They never think of the unintended consequences of their actions.
So ultimately, that'll be supportive of gold.
Ultimately, it's hugely bullish for gold.
Okay. This question from Diane. She says, Larry, with your prognosis that Europe, Japan, and the U.S. will be bankrupt within the next 5 years, does it seem possible or likely that all three will default or receive debt forgiveness, as Germany did after the war? Would this be a solution? Who would be left holding the bag?
Great question. Let's get one thing straight. They're all bankrupt today, right now, technically. They're being run on smoke and mirrors, okay? Fumes, that's it. They are bankrupt. Way more bankrupt than you realize, okay? They've managed to kick the can down the road for a very long time, but the cycles say no more. The piper is going to be paid. I think what you're going to see, believe it or not, is Trump, who is a master at this, go around the world and basically say to China, I'm cutting what I owe you, or what Washington owes you, which is $1.4 trillion in U.S. government debt. I'm going to cut it and only pay you $700 billion. And if you don't agree, I'm going to slap you with 45% tariffs, and I'm going to put you out of business.
A classic debt renegotiation, which Trump is known for.
That's what he's known for.
And his casino empire, that's right.
That's what he's known for. Will he be able to pull it off without causing complete pandemonium, even war? That remains to be seen.
Interesting.
But that's what's in his head. That's what's in his head. And truth be told, China knows this has to happen. Europe knows there has to be a debt renegotiation. Germany is our biggest creditor, okay, and as far as the European Union goes. Japan, you know, knows this has to happen. If it doesn't, it's Humpty Dumpty times 3, all falling off the wall at the same time.
True. This question from Peter, and it's kind of similar to one we had before. What is the risk of brokerage firms going bankrupt during the upcoming debt crisis? And here's the key part. Are there selected brokerage firms, such as TD Ameritrade, Vanguard, that are safer than others? And if so, why?
Yeah, I think 2018 to 2021, brokerage firms are going to be a safer place to park your money than banks.
Okay.
And they also, for what it's worth, have the SIPC insurance in this country, which is healthier than the FDIC insurance. And it's a larger amount. And already we're seeing more capital being placed in some of these big brokerage firms like TD, Schwab, Interactive Brokers than in the banks. So, you know, people are aware of it. There's more liquidity. I would make sure that whatever brokerage firm you put your money in, they give you what's called a non-hypothecation agreement. That means they cannot take your money and leverage it for their own purposes. Many brokerage firms do that without your knowledge, unless you specifically ask for a non-hypothecation agreement. That prevents them from ever touching your money in any way except according to your wishes.
Interesting. That's a great tip.
Yep.
Great tip. This question from Vic, he says, when it's time to buy again, what do you think of Silver Wheaton?
Silver Wheaton's a great long-term silver company. I have no problems with it, and I will be issuing a recommendation for it.
When the time's right.
When the time is right.
Okay, this question from Rick, he says, it seems that palladium is diverging from the rest of the precious metals. Why do you think that's the case?
Well, palladium has been under platinum for quite some time. It has flipped, and I believe the reason for that is basically environmental catalytic converters. Okay, they have found more palladium in Russia and South Africa than previously thought, and that has lowered the price, increased the supply, and there's been some technology advancements with palladium versus platinum that make it a better environmental protector for our automobile industry.
I see.
And of course, we have a big push towards alternative electric hybrid.
Yeah, that would affect
industry.
That would affect the audio industry,
and that's affecting both platinum and palladium.
Interesting.
Palladium and platinum will come back into favor, unfortunately, a lot like oil will much later in the game here, for geopolitical reasons. Platinum and palladium are still part of, unfortunately, nuclear arsenals. And, you know, we get into a war, an international war with Russia, then you're going to see platinum and palladium vastly outperform gold.
Interesting. Okay, this question from Phelps, he asks, historically, a rising dollar has correlated well with falling commodities, including gold. What are the probabilities that this historical relationship will not continue going forward? That is, commodities and gold rising together with the dollar.
I think it's very high. It does not happen all the time. It happens when these super cycles hit, like they did in the Great Depression, and like they're doing now, and like they did actually in the Civil War, just before the Civil War, where you have the Confederate paper rising in value along with gold and other tchotchkes and hoardable items. You know, it's an 80-year cycle, basically. And we're entering into it now. We're on the leading edge of it.
Okay. This question from Alexander. Larry, you read the pound sterling dollar exchange rate perfectly going into the Brexit referendum, that it will fall, excuse me, to the $1.20 level. It clipped that level. Where does it go now? Do you have any targets for dollar yen also? So two questions there.
They're all going to weaken against the U.S. dollar. I'll just put it that way. I mean, the dollar is going to, 1 to 3 month correction, as I just mentioned earlier. But the dollar's king of the hill. It's going to be that way for as long as 2 more years. So you're going to see the yen, in my opinion, continue to depreciate. It needs to depreciate. You're going to see the pound continue to depreciate. It needs to depreciate. It's the only way Britain can become somewhat competitive again. Same for Japan. And the euro is going to depreciate for its own reasons, but it's not going to revive the European Union. I'm sorry to say that.
All countries are trying to devalue their currencies to stay more competitive.
Yeah.
The Chinese, the Europeans, everyone.
Chinese, everybody. And
Interesting.
the fact of the matter is they can't do it enough.
Everybody can't devalue all at once, obviously.
Since 2009, over $10 trillion of U.S. dollar liabilities have been created. Those dollar liabilities have to be paid off. So that is really a constant bullish force for the U.S. dollar. But that's okay. You know, a lot of people are worried about emerging markets crashing because 1997, 1998, another currency crisis. Completely different. They had fixed currencies then. Now they have a flexible currency regime.
Right, that's right.
So they can adjust. And that's why you're not seeing China crash or any Asian economies crash. Slow down a little bit, yeah. But crash, collapse, not happening.
Interesting. What is your overall outlook for emerging markets? You live there a good part of the time in Thailand. Do you think that they will manage to avoid this global crisis?
Yes, they already have. I think they already have. I think it'll, you know, take some time to get back to previous growth rates. But I think it's the #1 corner of the globe to invest in.
Interesting.
Safely and profitably.
Okay. This question comes from Arthur. He says, Larry, thank you for standing firm in your convictions in these changing times. Great comment. In regards to your opinion that oil will drop in price, what are your thoughts about the inverse ETF, DUG, as an investment?
Well, you know, obviously low oil prices are going to be bad for oil explorers, refiners, upstream, et cetera. And, you know, they got a nice post-election bump. But if oil heads back down, as I expect it will, it'll take energy shares back down. But I will say this. In early 2017, if we get the low I'm expecting in oil, okay, and the pullback in the stock market, one of the best places to be is going to be back in the energy sector.
Interesting. Okay. Here's a question from Thomas. He says, Larry, how do you protect yourself against a cashless society? Do I want to, and if so, how?
Well, there isn't much you can do, unfortunately. They're going to be very aggressive at this. But what you can do is take advantage of alternative asset markets that are not being tracked, that are being largely ignored at this point in time. And that would be the new black market in gold that I see coming. Jewelry, which is portable. You can go through an X-ray machine and hop on a plane, you know, with your watch or your briefcase, whatever. Artwork, as we've seen all along, okay, for the past several years, the super rich have been continuing to buy, you know, $30 million paintings, okay, and storing them in Singapore and Hong Kong and getting them off the grid. And, you know, things like that. And seek out and keep your eyes and ears open for barter opportunities. Don't go for Bitcoin.
Right.
Okay, because government is systematically putting Bitcoin and other digital currencies out of business. They don't want them to exist, just like they don't want gold to exist. Okay.
Interesting.
And I'll keep you fully informed of what I'm hearing and what I'm seeing as this unfolds.
Right.
Because it's crucial.
Yeah, it's a big event. This question from Harley, he says, hi Larry, I've been following you for many years and have benefited especially from your gold insights. I'd like to learn more about cycles. If you ever decide to offer a course on cycles, I'd like to sign up. Meanwhile, can you recommend the best sources of knowledge on cycles so I can begin to study them now? What are some good starting points to learn?
It's a very complicated subject. I would love to give a seminar, a 2-day seminar, let's say here in Palm Beach Gardens, if possible, to talk about cycles and the history of cycles and how meaningful and how important they are and how real they are. But to get started, I would start with the basics, and that would be any and all works published by Edward R. Dewey, D-E-W-E-Y. He's really the father of cycles. He was commissioned by President Hoover to try and understand better the Great Depression. Hoover was actually a good guy. He got the blame for the Great Depression, but he took several steps to try and really reduce unemployment and mitigate the cycles. And he saw it coming, and he warned everybody. Nobody listened to him. And it was based on the work of his chief economist, Edward R. Dewey, who forecast the Great Depression using cycles. Now, a lot of people, ever since, for some reason, there are only a handful of us that really truly study it, but they think it's quackery, okay, until nobody can understand what's going on. And then they want answers from science and cycles.
Right.
It's been there the whole time.
Yeah. Thousands of years cycles have existed.
But for some reason, you know, people like, oh, you know, the iPhone 7, not a great advance over the iPhone 6. They want to hear the fundamental story.
Right.
Well, sometimes there's no fundamental story. Sometimes it's the cycles that are driving everything.
Always in the cycles.
Yep.
Well, unfortunately, that's about all the time we have for today. But if we weren't able to get to any of your questions, please remember you can always send them to Larry directly via the Real Wealth Report editor's mailbag right on our website. And Larry, you're always great about answering those questions individually.
Well, thanks for your help, Mike.
Issue.
And everyone, thank you for attending today. I wish you the best for the holidays. Please be a lookout next week for the December Real Wealth Report. It's going to be chock full of information that you're going to want to keep by your side all of next year.